So on Tuesday, we got news that AMC Entertainment is expanding its branded popcorn through multiple new stores. However, the stock was down on the news and over the past month because the market is making it clear that it does not want to see retail popcorn efforts as a meaningful catalyst for the business model of getting consumers to come to theaters to watch movies. Now, as you can see, really since the pandemic, shares are down 95% plus, as when the market economy reopened, just more people started watching movies at home. And so what we have is a situation in which the business of movie theaters is dying, and dying fast. Now, on the weekly chart, you can see that the down decline has paused, but is it just pausing before the next leg down? Before we look at some levels where I think you can short, let's look at this article. So on March 11th, AMC Entertainment announced that it will be making its signature branded popcorn available in Publix and Kroger grocery stores across the nation and online at Amazon.com. Unfortunately, this news is not helping AMC stock pop higher. So why isn't the popcorn announcement helping boost AMC stock? The movie theater chain shared that it is doubling the number of stores that it will carry its signature popcorn. It also announced that consumers will now have the option to purchase individual or 6 packs of its popcorn. But simply put, its retail efforts with popcorn are too small to matter to make a dent in their revenue and bottom line into the markets. Now, that isn't to say that AMC products don't matter to customers. As Rolling Stone reports, the Sandworm popcorn bucket commemorating the release of Doom 2 has been a big hit with moviegoers, but the bigger picture is that the company faces challenges getting consumers back into theaters while streaming on the rise. Now, multiple Wall Street analysts have reduced their AMC price targets in recent days. They state the market responded unfavorably to AMC strategic moves, evidenced by a 30% stock price drop following the announcement to sell up to 40 million new shares in September of last year. Additionally, AMC's efforts to reduce these challenges and its debt through debt for equity swap has resulted in more shareholder dilution, increasing analyst skepticism over its future. Consequently, quant analysts assign a strong sell rating to AMC stock, underscoring its challenging recovery path. Now, I gotta hand it myself and hand it off to the CEO, who's been taking advantage of the market volatility and the pump in the price by selling shares to increase cash to continue to fund probably what's the inevitable. Again, continued declines in the stock. Now let's go to the daily chart. I want to point one thing out to you. We have this drop, a couple of basing candles in the drop. As you can see, price attempted to get to this level at, say, 525, which tells you that there are sellers waiting for price. So that's one level that I'm looking at. The other level is this weekly sell level at, say, $6.20. That would be where price would definitely reverse at a minimum, react. This level, there's less liquidity here, and so if you get a short squeeze, price can breach through that. But this level is what I'm really looking at. And if I zoom out to the weekly chart, you can see that a bit better. You have this drop in price, one basing candle in the drop. So this is the level which I anticipate holding more so than this. But if you're aggressive and a day trader, this may not be a bad opportunity to sell short on a reaction if price moves higher. So now we are entering warmer weather, summer months, which should be good for the movie theaters. Depends on what movies are coming out, but I think the Hollywood strike has hurt the amount of movies that are going to come out, and I think that's going to put a dent in AMC's top line and bottom line. And so I don't anticipate price moving higher. I think it's just a dead business model. And any opportunities where you see price pumping is an opportunity to sell. Thanks for watching. Subscribe. Please like the video.